it has started. Right. So what you can see in front of you is this chart. Now, let's assume that you're in a position where you feel like you're ready to buy the property. So the first thing that needs to happen, that needs to be done really, is we need to carry out the affordability check. We need to understand, or you need to understand, how much money you can borrow from the bank to be able to buy a property. So once these calculations are done, and there is a complex way of figuring it all out, and each lender will have their different criteria and sort of formulas of how they calculate that. Once this is done, then we'll move on to the next step of the process, decision in principle. It sounds quite smart, but in simple words, decision in principle is the certificate that can be issued to you by the mortgage advisor. And this certificate confirms how much money, in principle, you can borrow from this or that lender. Now, I work with over 90 different lenders, so I can obtain the certificate from any of them. When you're doing your own research, if any, you will also see different terms for decision in principle. People also call it agreement in principle, AIP, and mortgage in principle, MIP, as well as obviously DIP. So don't be confused, it's all the same thing. Or it can also be called certificate of affordability. Now, very important thing, guys, when you have got this certificate, you are in a really good position to start looking for the property, for the house. You will notice that when you go and ask to book viewing for houses, apartments, or whatever it is that you would like to buy, estate agents very often will ask you, oh, have you got any proof of affordability? Can you tell us that you can actually have a mortgage? Now, the decision in principle, this certificate is that paper that you can present to estate agents. Now, when you present it to them, they would usually allow you to book a viewing for the property. Also, the benefit of having the decision in principle in advance is it puts you in a better position should you decide to make an offer on the property that you like. Because at the point when you make an offer, the estate agents will already have some proof that, yes, you can actually get a mortgage. And then they will go back to the vendor and will discuss your offer with them. Okay. Now, the next step, once you found the property, the offer was accepted on it, you will need to do to take a few smaller steps. First of all, you need to choose a conveyancer or a solicitor. So conveyancers and solicitors are those people that do all the legal work in the background on the property. They will be checking the property registration. They will be carrying various searches, checking all the paperwork to make sure that there are no restrictions on the property you choose to buy. If it's a leasehold, obviously they will be checking all of the documentation related to that, and they will be doing lots of other things. The most important thing is that at every stop of their process, you will still be aware of what's going on, because solicitors will be sending you a lot of emails and different reports and various documents to sign, read, agree, disagree. And then at that point, obviously, you will have the right to ask as many questions as you need to understand all of the ins and outs, ups and downs about the property. Okay, so they will be there to do the work for you. So when the solicitors are found, really, and you know what property you would like to buy, the next step of the process is actually submitting a full mortgage application to the actual bank, the lender, it's also called. Now, at that point, for example, if you're working with me as a mortgage advisor, having had a look at your circumstances overall, I will have recommended a certain lender that fits your circumstances. I would have recommended a certain mortgage product, certain interest rate, and then provided that you're happy with that, then I would be submitting the mortgage application to the lender and looking after it on your behalf. So, like I said, there are many more small steps, but I'm not going to go too much into detail about this. We can always cover that at a later stage. So once the mortgage application is submitted, obviously, conveyancers / solicitors will continue to work on your case. the lender, the bank or a building society will send a person to the house you want to buy to do the valuation of the property. Banks have to do it by law because they have to make sure that the valuation of the property that you choose to buy matches their records versus what the property is being advertised for, because what they want to make sure that the property is not overpriced for no reason. Okay, so you buy it for a fair amount of money. So once all of this done and the mortgage is approved, and let's say solicitors did all of their work, then they will start discussing with you a very important milestone of the process, exchange of contracts date and completion date. So exchange of contracts in very simple terms is the date when buyers and sellers solicitors exchange contracts, and from this day officially you are bound by the terms and conditions of your mortgage offer, and you are under the requirement to start repaying your mortgage back to the lender. So if you wanted to change anything, I always recommend, if you're not sure or if you've got last minute doubts about anything, about the property, the process, or whether you want to buy at all, it's better to do it before the exchange of contracts, because after that, like I said, you're bound by the terms and conditions of the mortgage offer. And then once the contracts are exchanged, the solicitor will suggest to you completion date. Completion date in simple terms is the day when the whole transaction closes down. So the seller's solicitors received money, and this is when the seller would give the keys to the estate agent, and you, as rightful owners, can go and pick up the keys. Okay. I try to make it sound as simple as possible, guys, and I hope it makes sense. Yes, there are smaller steps involved in the process. However, it's all manageable. And like I said, with the right guidance and support in place, you can navigate through this really, really easily. So I just wanted to suggest, this is a first part of my talk done. I would like to cover another part about advantages and disadvantages of having mortgages, and I suggest that we take some questions then. Is that okay? Yeah?
Yeah,
Adeline,
okay, that's fine.
Adeline, yeah, Adeline, what do you think? Does that make sense? So we'll just talk about mortgages a bit more, and then we'll take questions.
Yeah, that's fine.
Yeah, brilliant. Okay. Oh, thanks, guys. I can see the chat is moving. Amazing. Thank you. So I'm going to move on to the next slide now. Now, Adeline obviously shared with me when we were discussing the details of the workshop. She explained to me the most sort of biggest points of concern or questions that the community had about the mortgages, and two of those were advantages of having a mortgage. Now, this one is quite easy and pretty straightforward, so I will just talk through each point separately. So when you have a mortgage, it makes owning a home possible. And this is the obvious one. Obviously, most people, 99% of the people, don't have the a chance to buy the property outright straight away. But mortgages actually make this make dream of ownership possible by spreading the cost of the mortgage over many, many, many years. Now, the second big advantage of having a mortgage as well, it gives you flexibility in choice. Now, there are various types of mortgages available for people, and there is always one that will suit your specific circumstances and your specific case scenario. We will also, you will also have a choice of going either with a fixed rates deals or variable rate deals, and the opportunity to also have a longer term for your mortgage if needs be, just to sort of reduce your monthly payments. Now, there are also various mortgages for first-time buyers, for landlords, for different categories of clients and people. And again, that provides you with enough flexibility to go ahead with the mortgage that is only right for your specific case. Now, another point or sort of pros of having a mortgage is it's giving you long-term stability. For example, for many people, mortgages provide a sense of stability, and this is something that renting cannot offer. For example, if you have a fixed mortgage deal, you will know exactly how much you will be paying every month. And obviously that will be your goal. And also with time, you will be building up equity in your property. And again, this is the beauty that you will not have while you're renting. And let's be honest, we'll probably have all been in the situations where we've been renting, or a lot of you now are probably renting. And I had clients previously where they would come in back to me in despair saying, Inna, we've been renting from this person, landlord, for the last 10 years, but now he just turned up on our door and said that we need to move out in the next 3 months and we've got to find somewhere. Now, that causes a lot of unnecessary stress. And this is something that you cannot predict when you rent versus obviously having a mortgage, your own place. Now, the last and final point of or advantage of having a mortgage is government support. Now, it's all about a number of different schemes that government tends to design and introduce at different times, just to allow first-time buyers to get on the property ladder, because the government wants people to buy. They don't want to make it very difficult. And the more people buy, obviously, well, everybody will benefit from that. So Help to Buy scheme used to exist, but I think it stopped back in 2023. Now, that was introduced by a 95% mortgage guarantee scheme mortgages, where people were allowed to put as little as 5% deposit. Okay. There are also various schemes that will allow you to buy a share of the property, like shared ownership scheme. There are a couple of lenders become more and more flexible and open about lending, and there are a couple of schemes now with zero deposit or with £5,000 deposit. Again, each of those lenders that offer such deals, they would have their very own specific lending criteria, okay, to make sure that it fits their sort of appetite. And as you can see, there is a question at the bottom for you guys. Would you prefer to pay for someone else's mortgage or for your own? I would like you to think about that, but I think I already know the answer pretty much. So when I thought about this back when I used to rent as well, I was like, wow, that's a lot of money as renters. You know, across the whole of the country, we pay on a monthly basis for, and this money is used for some people to pay off their mortgages. And that made me think a lot. So, yeah. Let me just stop here for a second. Oh, one thing I forgot to mention as well, making it possible, talking about government schemes and various sort of setups. Obviously, government introduced Help to Buy LISA, where you can get a bonus of £1,000 for every £4,000 that you save, and then you can use Help to Buy LISA, for example, only to buy your first home. So that's what it is all about. Now, I think I've covered quite a bit, and I trust I might have generated a few questions. So guys, we're now going to stop probably for 15-20 minutes, and I will be happy to take questions from the chat. If you wanted to just ask it, you just need to turn your camera on, raise your hand, turn your camera on, and just go for it. If you're shy, like I said, you can drop it in the chat. So I'm ready. Let me just go in the chat. Sabrina, if you have any personally, or Adeline, please do let me know if there is anything in your inbox.
There's a question in the chat section. Maybe we should just start with that.
Yeah.
So yes, I can see one. Let me just start by answering this one. I have lived in the UK for 3 years on a skilled worker visa, but my employer only gives me yearly visa. How does being on a 1-year visa affect my chances? So not a problem at all. There are some lenders, again, they came on the market recently with a bit more flexible criteria about visa holders. And there are some lenders that do not require any minimum time left on your visa. Obviously, everything else is subject to good credit profile, income being present, and everything else. But it is possible for somebody like in your situation. That was a question for Yemi. Hope I said that name right. Yes, I hope that helps. So it is possible.
Yes, you did. Thank you so much.
That's fine. Anybody else? Don't be shy, guys. I'm here. Make use of this time effectively.
On the first slide of your presentation, you mentioned affordability check. Would you just run us through what the minimum salary for someone that is looking forward to going in for a mortgage? What's the minimum salary?
Okay, so first thing first is there is no such a thing as a minimum salary requirement if you want to buy a property. How much you can borrow depends on how much you earn. And the basic formula that most of the lenders use, and it's not a secret, you know, it's 4.5 times of your income. So let's say if somebody earns £30,000, I'm just doing a very basic calculation here in front of me. If we times it by 4.5, potentially they could be looking to borrow around £135,000. Then you add your deposit on top, whatever amount of money you've got saved. That is the purchase price or the maximum budget for the purchase of the property. Does that make sense?
Yeah.
Yeah.
Then can husband and wife like combine their salaries together to go for a mortgage?
Yeah.
Some of it I know the answer, but I believe each and every one of us can benefit from the answers you'll be giving us.
Yes, of course. So if both applicants wants to go on the mortgage, husband and the wife partner and the partner, it is possible. Then both of their incomes will be used. Let's say if one earns 30k, another one earns 25k, so that's £55,000 combined income that can be used for affordability. Again, if we just do if we times it by 4.5, we're looking at the ability for that couple to potentially earn around 247 up to £250,000. Okay. There are situations also which I anticipate there may be a question for where one is working but the other one isn't, but they want to go on the mortgage application together. That can be done as well. Or there are situations where one can go on the mortgage application, but the other one, for whatever reasons, can't go on the application. Usually it's due to some adverse credit score, some issues with credit profile, then that is possible as well. Yeah. Okay. Is there anybody else who would like to turn the camera on and just ask a question and be brave enough and ask?
Someone is raising up hand, maybe.
Hi.
Okay.
Hello.
Hi. Thank you, Inna. Thank you, Sabrina. Thank you, Adeline.
I can see you. Thank you, Chinen. Yeah.
Oh, that's good. You pronounced it quite
Oh
well.
gosh,
Try.
I know, I learned it.
Yeah.
I practice it every day. I promise.
That's perfect. Okay, just to ask, I have an interest in getting a house, like probably like within 3 months, and then I know someone I asked. She said that first of all, I need to look for the house, and then once I see the house, then we can start talking from there. So when you mentioned that the second thing is like first thing is to get an AIG, I'm wondering, I think I'm missing something.
Yes. So, good question. Thank you. If somebody told you need to find the house first, you can do. However, this is a reversed order of things.
Okay.
The right order of things and the one that makes more sense is you check what you can afford to borrow first.
Mm-hmm.
Because once you know the figure in your mind, plus your added deposit, you will have so much clarity about how much the property should be, the one that I want, the maximum budget. Because obviously we all naturally, we like houses that cost a bit more. But sometimes if you fall in love with that, let's say you made an offer, the offer was accepted, but then you come to the advisor and the calculations are made, it appears you cannot afford to borrow this much to make it happen, then it's a disappointment from you for you, first of all. Because you probably don't expect that. This is why I always say decision in principle, or let's say DIP, decision in principle first, so you've got clear picture of what you can afford to borrow. And then with this in mind, you go and start looking for properties. And then you won't have any doubt in yourself. You will be confidently presenting yourself to estate agents as well. And you will be in a better position when you make an offer, like I said, because you will already have evidence with you that you've checked it, you can afford to buy this specific property. Does that help?
Sure, 100%. Okay, just to ask, how do I go about the agreement in principle then?
So agreement in principle is basically you need to go online. You can do it yourself.
Okay.
But also people like myself do it too. This is what we're there for, calculating affordability. I know some of the banks, maybe like your own bank, may be offering it to you somewhere, along the lines for free. You can do it to start with. But what I noticed, when people do it themselves, they key some of the information themselves and they don't always key it correctly.
Okay.
Because as a mortgage advisor, I know what needs to be keyed and what it is that lenders care about.
Okay.
But you don't necessarily know this.
Yeah.
And then that's why the figure that you may get while you do it yourself may be different from the figure that I get for you.
Okay. All right.
Okay.
Thank you.
No worries. Thank you for your questions. Appreciate that.
Okay. Thank you.
Okay.
Another thing else. So sorry, I've got so many questions because I'm ready to jump into it now. Okay, I've been house hunting though, and most of the houses I see, they have, I don't know if this is derailing, but most of the houses I see are like the EPCD, and they keep like, oh no, people say no, it comes with a lot of energy and all that. What would you advise? What EPC do you think is more advised?
You know what? EPC rating of the property, in simple terms, it will not really affect the lender's decision to lend or not to lend, first of all. It's more of a personal preference, because A, B, and C, EPC ratings A, B, and C are classed as sort of energy efficient homes, which retain the heat, they spend less, consume less energy, and so on and so forth. EPCD is a very common rating for properties, especially for older properties. So that is absolutely fine. And you can always make some improvements to your property to change that rating from D to C.
Okay.
But that doesn't affect your ability to borrow money.
Okay. Thank you so much, Inna.
Sure. No worries. Thank you
I'll
for your
probably
question.
shut you up as regards to AIP then.
Okay, cool. Thank you. Looking forward to it.
Thank you. Bye.
All right.
Thanks a lot.
Anybody else brave enough to jump on the video? Yeah? No?
Someone's hand is up.
Oh, someone's hand is
Hi.
up. Yes.
Hi.
Hello. Hi, this is Yemi.
Oh, hi,
So,
Yemi.
some people say it's better to buy as a single than as a couple. Is that correct? It's like you're buying your first home, like you should buy it in one person's name rather than as a couple. Is that correct?
Not necessarily. It depends on the context. Why would somebody say that it's better to buy in a single name rather than in a joint? Was there any context to the conversation? Oh, Yemi, we can't hear you.
Yes, but she was saying like when you want to buy your second home, there are like taxes or some things you need to pay. So like when you buy as a couple, your first home, when you buy your second home, it becomes increased, like something like that.
Okay, so that's when buying a second home. Now, it comes down to the taxation rules in the UK. What I always recommend to, people that ask me this question, have a chat with the tax advisor, because they are best people, first of all, to advise you on taxation and stamp duty, land tax that needs to be paid. Okay. But then buying it in a single name versus joint name, I mean, I personally don't see the difference for the mortgage purposes. However, there may be difference for taxation, but that is a question for the tax advisor. So you would always need to get the advice from them just to make sure that you understand what you're going in for. Does that help?
Thank you. Yes, I did.
Yeah, brilliant. Thank you. Have you got any other questions, or anybody else? Any other questions? I can see a raised hand from Esther Atilola. Can you hear us? Would you like to?
Hi.
Yes. Hi.
Yeah. Sorry, just a couple of questions from me.
Yeah, sure.
And number would be, what is the what advice will you give for age category? What is the best time to get into properties or mortgage in the UK? I mean, age-wise. And
Age-wise.
also, yeah, about the how you mentioned recently there was this news about houses having minimum ERP ratings, because government is like clamping down on energy houses now.
Yeah.
So what is take? What should we look out for if we are going for property? And number 3 will be your advice on is a freehold building, and I forgot the other one now. I think there's a freehold.
Leasehold.
Yeah. Then also, I think the last one will be, what is your opinion on taking on showrooms? Because sometimes you have these developers having showrooms, and maybe over the years you want to take it as first-time buyer or second-hand buyer. You just want to take the showroom up.
Okay, so when you say insurance, what insurance do you mean from the developer?
I mean showrooms for
showrooms. Showrooms.
Yeah.
I'm sorry, I heard insurance. Okay. Okay, so sorry, let's do the question again then, because I was thinking about insurance, but it's showrooms. What's the question about that?
Now, what is your advice on buyers taking up showrooms? Is there any pro and cons to that as for buyers?
Okay. Okay, cool. Thank you. So I've got 4 points recorded here. Now, talking about the age, well, really, you could be any age and still be able to, borrow money. For example, at this moment of time, I've got a client, he's 55 and he's buying his first home. It's never too late, I would say. People buy it at the age of 60 and 65 and even 70. Obviously, the closer your age to the retirement age, the more sort of restrictive it becomes in terms of finding the right lenders. But I say it's never too late. Regardless of how old you are, explore this opportunity. If it's impossible, at least you asked. If it is possible, at least you can make it happen potentially. Okay? Now, in regards to EPC ratings, like I mentioned previously, A, B, C, or D are the most common energy performance ratings. A and B and C obviously are relate to homes that were built, let's say, in the last or recently or in the last 10, 20 years. A lot of properties in the UK have got EPC rating D, which is common. There is nothing wrong with that. It just means that at the time when the property was built, there was no such a thing as building energy efficient homes, full stop. But you can always make improvements to your property to change that rating from D to C, should you wish to. Or a lot of people don't even see the need in doing this. Now, freehold versus leasehold. I was expecting this question at some point today. Now, what I would like to say, if we, I think we should cover it separately, because again, it's a separate kind of conversation, and there are lots of smaller details which I don't really want to overload people with today. If I was to personally choose freehold or leasehold, I would go for freehold. But sometimes the situation, puts you in a position where you just can't find freehold and leasehold is the only option, and that is fine as well. If it allows you to go on the property ladder, go for it. You can always change, sell your leasehold property and buy freehold at a later stage. That's not a problem at all. There are lots of other solutions and variables further down the line in the future if you really, really don't want to stay in the leasehold property. But again, I made a separate note on this one, so I think I'd be happy to cover it separately. All right. And showroom homes, I don't really have an opinion about that. I don't know. From my personal point of view, show homes, obviously, a lot of people go in and out of it. Whether things get worn out, whether anything breaks, again, I don't know. It still will be pretty brand new when it gets sold to you. Whether there are any different rules or regulations or the value changes or drops, I am not aware, simply because I had nobody buying a showroom property, but it could be something new for me to explore. So I hope that helps, Esther, if you can still hear us.
Yeah, got it. Thank you very much.
And thank you for your question. We've got another raised hand. Aminat, yes, is that right?
Yes, thank you. Yeah, I wanted you to clarify, because I heard you were saying at some point that there are some lenders that could give you 5,000 deposit or something, that area, and some would actually demand for 5% and all. So I wanted you to, would I say, clarify on that part of your presentation. Then secondly, I asked a question on the chat box, and which was about if you have to take, for instance, you picked a mortgage that needs a renovation, and would the lender still, is there a possibility of lenders borrowing you for the renovation? If yes, what is it going to be like? How does it run? Then thirdly, take for instance your affordability is about, let's say, £200,000, and you get to go for a house that is, let's say, £120,000. It means that you have £80,000 left. Now, if you are to do your second mortgage, can the £80,000 still be applicable to the second mortgage? If yes, what are the conditions to that?
When you say 80,000, is it your own equity in the first property?
Yes, the remaining equity in the first property that you bought, because your affordability was 200,000, but you settled a house of 120,000. So difference between 200 and 120 is 80,000. So is it possible that on your second mortgage you can use that 80,000, or you have to make a fresh application?
Got it. Yeah. So yes, thank you for these three. So I made a note of that. So yes, there is currently a lender that allows you to put £5,000 deposit. However, they are one of those lenders that, or if both of the applicants or a single applicant applying on a visa, they would need minimum 25% deposit. So it kind of excludes it altogether. However, if one of the applicants has got a permanent right to reside and another one is on the visa, then this type of scheme may be available. Again, it's subject to checking all of the other criteria to make sure that it fits that lender's ticks all of the boxes. Now, talking about the 5% deposit, yeah?
You were talking about a visa that if they are, what type of visa would they be asked to pay 25%?
So we'll move on to that in a minute. Yeah. Okay. So yes, I've got this prepared for you as well, and I'll be answering this a bit later. But 5% deposit mortgages is where you buy 95% of the value of the property. Yes, there are lenders that will be happy to take such a little deposit. Again, they may be a little bit stricter on their criteria, on affordability, on other requirements, but the options are there. So I placed quite a few of my clients with various lenders where they only were required to provide 5% deposit. Again, it made it possible for them to go on the property ladder. So the opportunity is there. Now, renovation. So if you bought a house and it needs some works done, initially you can only borrow enough to buy the property without any additional funds for renovations. Okay. However, the general rule is after you've paid for your mortgage for 6 months, you would have an ability, you would qualify to borrow additional funds for renovations. But you would have had to pay your mortgage for 6 months first. Does that make sense?
Okay. Be from the same lender or from another lender?
From the same lender.
Okay.
Yeah,
Okay.
yeah. Yeah, so that's that. And affordability. So if you wanted to buy a second property and you've got £80,000 of equity in your first one, yes, you can pull some of the equity out of the first property to use as a deposit for the second home. Yes, you can do that. So you will have 2 transactions to deal with. The first one will be remortgaging your first home to pull out the additional funds. And the second transaction will be purchasing your home and borrowing funds for, obviously, the next property. I hope that explains this. And you need to have enough equity to satisfy the lender's criteria again to be able to pull it out.
Okay, so that means the first home, that means the first house has to be remortgaged. You cannot keep it, right? If I understand what you're saying.
You will still keep it. You will still be the owner of this property. You will just have to do the remortgage and remortgage for a higher amount because your mortgage will increase. But that increased amount, portion of it, you will be using as a deposit to purchase another property. And effectively, you will have 2 mortgages, 2 properties that you will own with mortgages on them.
Okay.
Yeah.
No, I don't seem to understand what you just explained, but okay.
Look, you can always put it in writing to us, okay? And then I'm happy to discuss it with you in a bit more detail individually. All right?
Okay.
Okay, cool. Thank you. Right, I think I've got time for a couple of more questions, and then I'm going to move on to this second part of the session. If anybody, Adeline, did you have any questions asked in your personally?
I have another question.
Whose hand is up?
I have another question.
Okay, I'll just
Can you hear me?
Yeah, hello. Yeah.
So my question is it okay to deposit the requested amount or to go over it? Like if the bank or the developer is asking for a 16%, is it advisable, like if you have 25% to put it, or give them the 16% they're asking for and then you use the rest of your money for something else?
Well, look, I always say if you can put, the more deposit you put down, the better, because simply it helps you to minimize your monthly outgoings for the mortgage. However, if you need these extra funds to use for something else, because mortgage or home buying process is always associated with expenses anyway, then it's okay to put some money out of those 25%, you know, to spend on the house and whatnot to cover other costs. That's absolutely fine. But the option is always there. If you want to put the maximum available deposit, that's absolutely fine. You can do that.
Thank you.
Yeah, all right. And let's do one more question.
I have my hands up since. Yeah, I just want to ask about trust, because I've watched some videos about people telling others that when you want to buy your home, you should buy it in trust, or you should place your home under trust to avoid inheritance tax later in future. So I want to get like a clear view about this trust of a thing.
So it is very individual, first of all, depends on largely on your individual circumstances and why you feel like you need to put the property in the trust. Now, putting properties in trust is not something I personally deal with. It's a separate sort of industry. There are people who have got license to deal with that. A colleague of mine that I work with, he deals with that on a daily basis. And if you wanted to know a bit more about this, obviously, we can always put you in touch with him just to get a bit more information. Because I had clients asking me previously, and I think the best source of information would be him because he's qualified to do that.
Okay.
It works for some, absolutely, but it doesn't work for everybody.
Okay.
Okay.
No.
Any other question from you?
No. That's it.
Okay, brilliant. Okay. So
Someone's hand is still up. Someone's hand is... Yeah, T.
Sorry, I have a question. Sorry. Oh.
Let's take one more, guys. Yeah, because I'm just cautious of time. Let's take one more and then we move on.
Yeah, just a short one. If you are buying as a couple, is it compulsory the both must be on a permanent role? Like
so is it compulsory? What? Sorry.
Is it compulsory the two parties must be on a permanent role, like having a permanent job? If you are buying as a couple.
On a permanent job, not permanent right to reside. Well, look, you can do agency work. However, there is a minimum requirement. If you work for the agency, minimum 12 months experience is required.
Okay.
Yeah.
All right.
So that is potentially possible.
Thank you.
But minimum 12 months required. Yeah. Okay. All right, guys. Oh, well, again, those who wanted to ask, but we didn't have time to, we are going to run another Q&A session at the end of the second part. So hold on to that. If not, like I said, you can send your questions to Adeline, and then Adeline, you can then forward it to me, and then I'll be happy to cover those. Is that okay? Yeah? Yeah, brilliant. So let's move on to the next part. If you just bear with me a second, guys, please. Okay, so again, this is something that Adeline was asked within the community, and this is why I decided to talk about this today. So most commonly accepted visa types for the purpose of the mortgage. Now, the most common that I work with is Tier 2 skilled worker visa. Adeline, could you just nod and tell me if you can see my slide about visas? Yeah, brilliant, thank you. Tier 2 skilled worker visa, where you get sponsorship, through the company, and then you come over here and you do work. I also deal with spouses or dependents of those who are here on skilled worker visa, so that is absolutely fine. No issues with that. Lenders are quite happy with this situation. You could also be a family member. I'm just talking about the bottom point. Family member of a settled person or somebody who has got a permanent right to reside or indefinite leave to remain. In this case, it is also quite possible, and it even opens doors up for more lenders, because sometimes if one on a visa but another is on a permanent right to reside, they may treat you just like a normal standard case without any restrictions or limitations. And student visa, again, as being a student as such, you obviously, it doesn't restrict you from applying for the mortgage. However, what you need to be aware of, you come to study, but for the lender to accept you for the mortgage, you need to have some income. So it all comes down to having income, again, if you're on a student visa. Now, I have had a few cases previously, guys, where somebody would be on a Tier 2 skilled worker visa. However, they initially came to the UK on a student visa, did their graduation, university degree or whatever, and then requalified to get on a skilled worker visa once they got a job. So this case scenario is possible as well. That's absolutely fine. Now, obviously, there are other visas that, again, I'm not going to go into, and they are just not accepted by lenders for whatever number of reasons. It could be because there is uncertainty of how long the person will be staying for in the country, or some other restrictions that lenders are not happy to take on board. At the end of the day, what I always say you will need to understand is when lenders look at your case, at your application, they see you as a risk, and then they decide whether you are high, medium, or low risk for them. And then based on this, they lend or they do not lend. Okay, so this is as for visa types. Now, I also had a question from Adeline, and I would like to elaborate on this one a bit more. And I will then be happy to take some more questions on this, because I guess there will be some. So lenders, we talk about banks and building societies, have got different requirements or different criteria or different rules for visa holders, and also sometimes they give it another name, foreign nationals. So visa validity is one of important factors. Again, lenders are becoming a bit more flexible with their criteria, because they understand the importance of those people on skilled worker visas, of them working here in the UK and the jobs that they do. So they would like to be a bit more flexible with that. Now, the common criteria used to be 1 or 2 years left on the visa to run to be eligible for the mortgage. Now, there are some lenders that now said, we don't care about how long they've got left, as long as they've got some time remaining on the visa. That is fine. Guys, I need to reiterate again, everything is very individual to each case. Okay. Now, length of time in the UK. Again, the most common criteria used to be you would need to have been lived in the UK permanently for 2 to 3 years before being eligible for the mortgage. Some of the lenders now are ditching these criteria, and they say, we don't really mind how long you've lived in the UK. It could be a few months, it could be a few years. You could still be eligible for the mortgage. Each lender will have individual. Somebody say minimum 1 year in the UK. Somebody will say minimum 2 years in the UK. Somebody say no minimum stay requirement. So that could be the case as well. Now, obviously, to qualify for the mortgage, to be able to borrow money, you will need to show evidence or proof of your employment. You will need to have permanent employment in most cases, or if it's the agency, like a previous question, you would need to have been working for the agency and have agency working experience for minimum 12 months. And you would need to be able to evidence that via payslips or bank statements and salary credits. It depends on the lender. Each lender will be asking for different things. Also, to be able to buy in the UK, by default, you will need to have a UK bank account. This is where your, that what you use for your daily expenditure. This is where your salary comes through. This is where your direct debits are paid from. This is where you save your money. So bank account is a must. Now, minimum required deposit. So important here, guys, there are a lot of lenders that work with visa holders. That's not a problem. That's not an issue at all. However, a big majority of the lenders want you to have minimum 25% deposit to be able to borrow with them. And I'm talking about a smaller proportion of lenders, I can count them on my fingers, that say, we are happy to provide for you to provide anywhere, as little as 5% deposit, or 10% or 15%. You don't have to provide much for you to qualify for the mortgage with those lenders. And they get the majority of applications, because let's be honest, and again, I have this conversation now and then with a lot of my clients. You guys come here and it is just impossible for how long you've stayed in the UK, for a limited period of the UK. it's impossible to save a lot of money very quickly. Let's be honest, realistically, because you've got lots of other expenses. You've got things...
Oh. Please kindly mute your mic.
Yeah, it's done now. It's done now. You've got other expenses to deal with because, you know, you change land altogether, you change country altogether. Initially, visa fees, when I talk to my clients, it's horrendous how expensive some of them are. So these are your priorities. Of course, saving a deposit for the house becomes sort of number 2, 3, or 4, or 5 priority because you must do necessary things first. And this is why most of the clients on visas, they would go with lower deposits. 5 to 10%, I would say, is the most common. And that's absolutely fine. There are lenders for that. Source of or origin of the deposit is my next point. There is some criteria around this, various criteria from various lenders. The source of deposit needs to be clean and trackable. What I mean by that is, if this is the money that you saved through your employment in the UK, you'd need to be able to provide evidence, i.e. in the form of bank statements, from savings, from current account, to evidence the build-up of these funds. Sometimes you will be asked to provide 3 to 6 month statements. That's fine. Sometimes you will be asked to provide a year or 2 years worth of evidence. I once had a case, a visa case, where my clients were asked to provide 5 years worth of their savings account statements to track how they built up their savings. A very common thing, again, it's a cultural thing, ajo or thrift. Is it thrift? Ajo. Let's call it ajo, okay? You guys do it a lot. You're a nation of savers, and I totally appreciate it, and I love it. Ajo is a great thing. However, it is very, very confusing for the UK system. This is why a lot of solicitors are not entirely happy to work with the deposit that originates from Ajo. And I'll tell you the reason why. Because solicitors are required to carry out anti-money laundering checks. And if they were to track the source of funds, it makes it almost impossible, because the funds were sent to you first. Before that, they were in your friend's account, on your family member's account. Before that, obviously it came from another friend. They would have to dig up so much to be able to prove where the funds came from. I do have, I think it's just one firm on a panel that of solicitors I work with that is happy to look at Ajo as a part of deposit. However, it is very individual and it's not guaranteed that they will pass. But also some of the lenders may be quite reluctant to approve the case where money comes from lots of different people. Okay, you can get gifts as well as an option. So your source of deposit may not just be your savings from employment. It could be a gift from a family member, a close relative, or a friend. Different lenders have got different requirements about this. Some of them would have a clear explanation of who they will accept it from, i.e. close family members, mother, father, sister, brother, grandparents, in-laws, and cousins, uncles, and aunties. Some will not accept cousins, uncle, and aunties. Again, it is very case individual. Now, sometimes part of your deposit may be coming from a sale of something. It could be an asset. It could be some physical object, I don't know, a piece of jewelry, a car, anything. Now, for you to prove where it came from, you would need to retain relevant receipts to prove where you got this money from. If you had a car, obviously, or jewelry, receipt where you sold it, how much they valued it for. Same for the car. when the ownership ownership changes hands, the lender or the conveyancers might need to see this. So you need to retain as much evidence as you can to make it easier to then prove to the lender and to conveyancers where this money came from. I hope all of this makes sense, guys. I know it's quite a lot of information, but I really do hope that it is helpful for you and will help you to prepare for, for something that, again, you could have searched it on Google, but you would have to check many, many websites to find what I'm telling you now. So, and one last but not least criteria or rule or requirement from lenders to be able to lend, to give you money. This is the last point: overall credit profile, your credit score. Okay. This is probably one of the most important things, especially for visa holders, because when you come to this country, there is no credit profile. It doesn't exist. Your points start building up when you start opening bank accounts and setting up direct debits and other things. And it takes time. And that's absolutely normal. Nobody gets a high credit score from the very beginning. And credit score is as important as your proof of ID, proof of address, proof of income, proof of right to work. For those who don't know much about credit profile or how it works in the UK, it's basically a complex set of information about you and ways of how you conduct your finances in UK financial systems. Depending on the things you do, the score may go up or down and affect your future ability to actually borrow money in negative or a positive way. In the UK, they also say this about credit profile. To be credible, you need to be visible. What it means, basically, you just need to have digital footprint in financial systems in the UK and be visible for them to gain trust and for them to be willing to give you money. If your credit score is low, that is not a problem. It just may restrict what lenders we can approach. Or they may have a slightly tighter or tougher criteria or higher interest rates, because for them you are a risk, because if your credit score is low, something might have affected it. But yeah, due to the number of lenders I work with, there is a lender for almost any sort of case scenario. But credit score is vital, to be able to get any sort of lending in the UK, but be it mortgages, be it personal loans, be it credit cards, and so on and so forth. And I just wanted to say that, especially for mums in Sunderland, me and Adeline discussed it in a lot of details. We are preparing another workshop, and that's all about credit profile in the UK. Now, we came up with a date, which, Adeline, you believe that will work for everybody. So we would like to suggest the 28th of June, which is Saturday, for the same hours between 6 and 8 p.m. for the workshop. And obviously Adeline will announce it separately. I'm excited about this one because it will be a real eye-opener for a lot of you, and it will provide you with lots and lots of clarity and guidance on how to move about buying your own home, how to build your credit score, how to build your credit profile, but also how to maintain a brilliant financial reputation in the UK. Because inevitably, if you have a good financial reputation, it just makes things tad easier on the way of you buying a property of your dreams. So this is the one I'm very excited about. I hope so you are as well, guys. I also thought that I would like to offer something to the community, I wanted to add some real value, and I was thinking of how I can do that. So I came up with this suggestion, and so there is a bit of homework for you guys to do. You don't have to do it immediately. You can do towards our next workshop, closer to that date, because it just makes more sense. So I am happy to offer to those who are happy to obtain a copy of their full credit report, I'm happy to offer a 15-minute detailed review of their report and advice in what direction to go or what things to do, steps to take to build up your credit score. So what I would like to do now, and I hope you will be able to see the slide. Adeline, could you please nod your head to let me know you can see that? So if you've got phones there, I would like you to scan this QR code. It will take you to a website called Check My File. It's a third party. It's not been designed by me. It's a third party website. By registering with Check My File, you will be able to obtain a full copy of your credit report. It will have a digital financial footprint for you since the moment you came to the UK. Well, for most of you, for the last 3 to 6 years, let's say. Okay. Now, the main thing you remember, just like with Experian, if you ever used it, once you register with Check My File, you will be given an opportunity to use this version for free for 30 days, but then you'll be charged $14.99. So you don't have to wait for 30 days to then be charged. Just generate a copy of your credit report, save it as a PDF file, and just cancel your membership within 30 days. You can keep it opened. That's absolutely fine. It's up to you how you want to do it. And I'm quite excited because I did credit report reviews, and I do them regularly with people, with my clients, and it really, really helps. And it opens eyes for a lot of things. And then people come to me in 3-6 months' time and say, Inna, everything we discussed, all of the things you wanted us to do, we did it, and our score actually improved. We are now ready to buy. So I'm quite happy that I can offer this to you and to community. Adeline, what do we think? I can't hear you, by the way.
Yeah, it's a good one. People are already cheering you up. You can see them.
I can
clapping.
see. I can see one. Yes. So take either a screenshot of this QR code, then you can then scan with another code. Adeline, you will have a copy of this presentation.
Okay.
So you can then share it again with people on social media. Okay. Yeah. Now, you may ask me a question, Inna, but how do you do the review? So I've got another QR code for you guys, which I would like you to scan as well if you want, and save it in your browser. That's the one. So for me to be able to talk to you, you would obviously need to be booked in my diary. The only way I do it through the booking link. So this specific QR code will take you, will take you to the website that's linked directly to my diary. And you would be able to book yourself in for the review. The only thing I would kindly ask you guys to do, when you book yourself in, you need to have a copy of your credit report sent to me in advance in PDF format. And when you book an appointment, there will be a reason for an appointment. If you put something like #MIS credit file review, so as I know where you're coming from, that would be really, really helpful. And I can then keep track of the numbers. And obviously, I'm sure that Adeline would want to know the feedback about this. Is that okay? Yeah. So guys, make sure you do take screenshots of both codes and make use of them. And this is your homework for our next workshop. And I'm really looking forward to this one. And like I said, I believe this is going to be a real eye opener. The information I will be sharing with you is not something that you will find easily on Google unless you do a lot of research. So I'm happy to provide you with a condensed version of it and then dive deeper into this with, you know, each of you individually looking at your reports individually. So that's that one. Now, I've done quite a lot of talking, I just realized. I am happy to now allocate further 15, 20 minutes for further questions, guys. So they can relate to the first part of the session. They can relate to the second part of the session. Anything that needs a lot of time responding, like I said, I will be happy to elaborate on it via a separate social media post or cover it in a separate session. That's an option. So fire away, guys. Make use of this time with me today. Adeline, if you've got any questions from yourself, from the community, please do let me know. Right.
I think some person's hands are up.
I've just tried to mute them, so hopefully we're fine.
Yeah. I have two people's hands up.
Yeah, let's Comfort. There's somebody called Comfort. Let's talk to you.
Sorry, I think I've raised my hand since the first session, so I don't know if I can still. It's just a quick question. Can I still?
Sure. Yes, please. Fire away.
Did you say yes?
Okay, we're listening to you.
Okay, so the question is just about when you mentioned something about getting funds to renovate the property, and you said it could be done 6 months after you've paid, if you've paid your mortgage for 6 months. So I just want to know, will it still be the same at the same mortgage rate you get, or will it be a loan or something? I don't know if yeah.
Amazing question. I understand it. So no, it will be a different rate based on the products that are available in the market there and then. So effectively, once you do borrow additional funds, you will have your main mortgage part on one interest rate, and you will have an additional borrowing, which is the second part of your mortgage, on a different rate.
Okay.
Does that make sense?
Yes, it does.
Okay. Any other question from you?
Second question, does your expenses, like you talked about getting a decision in principle, like you what you're earning, something like that would determine so does your expenses, like what's going out of does it have any effect on your decision in principle?
Brilliant question. Thank you. I was waiting for this one. Yes, of course. So when lenders calculate their affordability or how much you can borrow from them, they look at two major things: your income versus your expenses / financial commitments / daily expenditures. Now, you may be earning a lot,
okay,
but you also may have loads of money on your personal loans and credit cards owed. Now, that will affect your affordability slightly.
okay.
It will reduce it. However, if you are in the position where you are due to pay off your loan, let's say in the next 6 months, because it's coming to an end of the agreement, or you're using a credit card that you pay off in full monthly, that is absolutely fine. Some lenders will ignore these commitments altogether.
Okay.
Also, things that may affect affordability apart from your personal loans, credit cards, cars on finance, student loans, sometimes whatever you pay after, when you get your wages. So there is some deduction for student loan. It could be childcare costs, because some of them may be for going on for quite a long time, especially if the baby is very young. Things like school fees as well, if the child is going to a private school. or I don't know, some professional fees that some medical professionals are required to pay sometimes. So that can affect it. Something that you would be paying basically on a permanent basis, even if when the mortgage starts, that may affect your affordability. However, there are, you know, more generous lenders, there are less generous lenders, and everything is so individual. I had a couple last year from Nigeria, by the way, and they were buying a property around Yorkshire area. They had a combined income of around £40,000. However, their combined debt was £35,000. So their total income versus debt was nearly the same, which was a bit tricky, but I managed to find a lender for them, and it was all okay at the end. So it is normal to have some financial commitments because we are, you know, human beings. What becomes a worry is if the lender can see that somebody is constantly using their overdraft, not in the best way, or rely on their overdraft heavily, or rely on usage of credit cards heavily, months in, months out, or, you know, overspending, spending more than they actually get paid. And these could be warning signs, or when they can see missed payments. Again, this is something I always encourage everybody to avoid. You know, if you change addresses, if you change providers, please do make sure that you guys deal with your direct debits. Make sure that you cancel the direct debit properly with the previous provider, update them, update it with a new provider. Or if you're struggling with, I don't know, a direct debit is due tomorrow from your account, but you don't have enough funds, ask somebody to transfer the money to make sure that the payment doesn't bounce back and doesn't get registered as a missed payment in your credit file. I hope that helps, Comfort.
Yes, it does. Thank you.
You're welcome. Let's move on to the next raised hand. It's Chef K. Hello, Chef K. Can you hear us? Are you with us? Maybe not. Okay. While we're waiting for Chef K, shall we?
Hi, I'm here now. I was muted.
Okay.
Hi.
I probably muted you because your mic was on earlier
Yeah.
on. Sorry.
Oh, it's all right. It's okay.
Yes. What's your question?
So you were talking about was it Ajo then?
Yeah.
So my question is relating to Ajo.
Yeah.
So if I had been getting Ajo in my account for a while, and let's say for the past 3 years, and now I want to start my mortgage plan, how far back would they trace my account? Like, I don't know, what's the bank statement length they would literally check before the mortgage? Yeah, because if I had been doing a job before and I stopped, would that affect my bank statement?
So, yeah, thank you for this question. I mentioned it briefly previously on another question, but I'll go through this again. So the problem with Agile, the source of funds, when there are a lot of people funding it, is very hard to trace for conveyancers, because conveyancers or solicitors, what they will do, they will need to carry anti-money laundering checks and provide this information to the lender for the lender to say, yes, okay, we are happy with that, or no, we're not happy with that. Now, with Agile funds, it is hard to track it down to where exactly the money came from. Because the main principle is, for any deposit, there needs to be a very clear source. They are either your savings from employment, it's either a gift from somebody, a one-off from a family, or a gift from 2 family members, possible. But when it's kind of a gift / not a gift from a lot of people, it's hard to verify the source. And for this for this reason, a lot of conveyancers, they wouldn't take on cases that have got ADJO declared as source of deposit. How far back they will want to go is unknown. The minimum that they would usually request would be 3 to 6 months of bank statements. Okay, going back. But they may request more. And I said one of my cases was where solicitors requested my clients for 5 years worth of bank statements to prove the source of their funds because they were not happy with 1 year evidence. They said, we still need to see beyond that stage. We would like to see 5 years. Back in the days, I don't think they knew how to use a scanning option, but there were quite a lot of pages. Basically, they asked Barclays to send them 5 years worth of bank statements. And then they brought it to me. And I then had to go through each statement separately, highlighting what the lender wanted me to highlight, so highlighting it for solicitor as well, and showing how their £15,000 deposit was building up. So this is something that is very, very individual, how far back they would want to go. But like I said, I would encourage you to avoid using ADJO funds as source of your deposit. Okay, I hope that makes sense.
Yes, it does. Thank you.
Okay, you're welcome. Anybody else? I can't see, I can only see one page. We've got another. Adeline.
Yeah, I'm here. Hello.
Hello. Aminat, yes, hello again.
This is Aminat again. I wanted to ask, with respect to tracing of funds, would lenders also trace the source of your funds for an ISA? If you have your deposit in an ISA account, a lifetime ISA, will there still be tracing of funds on how you got the money to put into ISA? That's one. Then secondly, is it possible for one person to have two different ISA accounts with probably, let's say you have what's it called now? You have a lifetime ISA account with Moneybox. You also want to open another lifetime account with, let's say, somebody like Vanguard or something. How possible is that?
Okay, cool. Thank you for your question. So, yes, the solicitors will be willing to trace the source of your funds, even if it's in the ISA account. How far back they're going to go, I can't tell you. It is going to be up to them up until they're satisfied with their anti-money laundering requirements and checks. Is that possible to have two ISAs? Again, I'm not competent in this question fully, but I had clients where they would have Moneybox and another ISA account, cash ISA though I'm talking about. So potentially it may be possible, but I would say just do your own research, speak to each provider individually. But I saw Moneybox and cash ISA, yes, being used for deposit as a combined source of deposit. Does that help?
The last question.
Yeah.
At what point does the what's it called now? Does the investigation of how you came about your deposit come in? Is it when you have actually paid your initial deposit, or before you pay the initial deposit? If
Amazing.
it is,
yeah, that's a good question.
After you paid the initial deposit, and lenders are not sorry, I have
that's all right. It's totally fine.
And lenders are not happy about your financial statement, probably from ADJO or whatever. Are they going to refund your deposit if it is after you have paid the deposit, or the deposit go down the drain?
So the good news is, Aminat, you don't have to pay any deposit at early stages at all. You're usually required to transfer the deposit funds to the solicitor towards the end of the transaction when they're ready to exchange contracts and complete. However, when you start the home buying process, let's say you found the property and the full mortgage application is ready to be submitted, as an advisor, I would want to see your deposit available in the UK bank account. And as an advisor, I carry out my own checks on the source of this deposit, which I then obviously break down to the lender, which then conveyances as well check for you. So you would need to have your deposit in the UK bank account by the time the full mortgage application is submitted, which automatically means I would have checked it at that point initially. However, you don't need to pay your deposit at the beginning. Like I said, you pay towards the end of the transaction. You won't lose any part of it if things go wrong.
Okay.
Yeah.
Okay.
Does that help?
Yeah, it does. Because someone had told me that something like that happened and the person lost the initial deposit of 12,000, and I'm wondering how. Why? Because the person was using a job.
It depends on the context. Yeah, I would want to know a bit more details because there must be a reason why that happened. While we are on it, by the way, because you mentioned at what stage to pay the deposit, and again, my clients from Nigeria, for example, they mentioned to me a few times that in Nigeria, the home buying process takes about 2 to 3 months typically. In the UK, it can take anywhere between 2 to 3 months up to 6 months. So as you are aware, if somebody finds home tomorrow and we submit the mortgage application tomorrow, you're probably looking to move in sort of in about 3 months minimum towards the end of the summer. So I want you to have some realistic expectations and timelines as well.
Okay.
Yeah. No worries. You're welcome. I have got.
Can I ask you a question, please? My hands have been up since.
Sorry. Yeah. How do I say your name, by the way?
Ebere.
Ebere. Nice to meet you.
Nice to meet you too. So what would you advise someone who's intending to get a mortgage in like a few months, say 3 months time, but the person has already been saving with Ajo? And what could the person's chances be?
Like I said, it will be challenging simply because it will be nearly impossible to prove the source of those funds from Ajo because there are so many people contributing towards that. And I can say to you, okay, we can make it happen, for example. However, let's say we're halfway through the process and then solicitors start verifying your deposit. That's where it can all stop. Because they will say, sorry, but we're not happy with the source of that. And they will have to report it to the lender. And then the lender will say, sorry, but we're not happy with the source of the deposit. So what you will be forced to do, you will be forced to find an alternative source of deposit, which is either asking family to help you for a gift or selling an asset or I don't know, some expensive gadget or the car or something, which is what people do sometimes to raise alternative deposit. Yeah. This is why I talk about these Ajo, contributions at very early stages, because if it's a big chunk of your deposit, that's probably not necessarily going to work. Yeah.
Okay.
But I totally understand. And I think the idea of Ajo is amazing. We tried to do it with a family. It was just 1, 2, 3, 4. Because I found out about this from my Nigerian clients, and we tried to do it for a month. It didn't work for us because we just couldn't commit. It was quite interesting, and but the whole idea is amazing.
Yeah.
I keep on asking my husband. I'm like, we need to do it. We need to do it. We need to involve a few more people because I think it's amazing.
Yeah.
But for the UK legislation and tracing funds, it's little bit complex.
Okay.
A little bit too complex. Yeah.
Makes sense.
Yes.
All right.
Okay.
So the alternative the person could have is getting funds, maybe gifts from family members, right?
Gift, yes. You just have to find an alternative way of saving it. Yeah.
All right. Thanks so much.
No worries. You're welcome. And those who have their hands raised for a while but didn't have an opportunity, please do come up. I would like to hear from you because we've only got about 10 minutes left.
Hello, can I talk now?
Yes. Is it Esther again? Yeah. Hello.
just have a few questions to clarify a few things. Number one, I know you are like a giant in the industry, and now the UK has experienced immigrants coming in recently. My question would be, what are the things you're trying to do to help immigrants? Because if you look at this 5% to 25% deposit, that's huge. In the short while, you want to raise like 30,000, 40,000 as a deposit. That's what is the industry doing to help people like us? And that's one. Number two, about ad search and soft search on your credit score. Does it have any role to play with the lender or your solicitor? And also, does life insurance have any role to play as well? And about the source of fund, we've cancelled out the thrift of the thing. Now let's talk about gifts. How much of a gift can you receive from friends and family? Because you said they're still going to track it, they're still going to make sure it's from a legit source. How much can we receive? What is the max? What is the minimum that we can actually get? And number five, I would like to talk about is combining bank statements. For example, you receive a salary with an account, and you have another account which you do your direct debit from. Can we actually combine this?
Okay, as in combine for what purpose?
For mortgage. Can you combine your account with mortgage?
Yeah. So these 5 points, yeah? Okay, amazing. So I'll start with the last one about bank statements. That's the easiest one. So yes, you can have 2, 3 accounts. Some people have got 5 accounts. They use one account just for direct debits. They use another account just to pay for fuel and food. They've got another account just for some savings or something else, or for childcare costs. It's fine. All of these accounts would need to be presented to the mortgage advisor, or if you're doing directly with the lender, to the lender, just so as they could see your running daily expenditures. Okay. If some people prefer to use just one current account for all of the expenses to include their savings, and that's fine as well. They don't have to be separated. But it's always easier if you separate your savings, for example, from your main account, because it's just easier for you then to track it, what you've got. Let's talk about, let's go back to your main first point, because anywhere between 5 to 25% deposits. You said 25% deposit is a lot of money. Yes, to save during such a short period of time that you guys stay in the country. So there are 95% mortgages in place where you just look to save 5%. Now, one of the good schemes that I think is amazing for getting on the property ladder is a shared ownership scheme. Let's say you found a property in your area that for the full price of £200,000, and you buy a 50% share of that property for £100,000. Now, you would need to put a deposit down based on the price of that £100,000 share. If it's 5% deposit, that's only £5,000 you need to save. If it's 10% deposit, it's £10,000. If you buy a smaller share, I don't know, of 25%, then we're talking about even a lower down payment, because it's going to be a smaller proportion. Again, talking about a family that I helped with end of last year with a shared ownership scheme in north of the country, Yorkshire, that way. So they were buying for the property was worth 160k, and they were only buying 25 or 30% share, and the deposit they had to put down was around £3,000. And they only needed 3 months to save the deposit, because they had 2 salaries together, and they were able to put aside at least £500 to £700, even to up to £1,000 every month. So within 3 months, they saved £3,000 for deposit, and then some extra money to cover some other costs. So shared ownership scheme is the way to go. Again, this is something I would be happy to cover in more detail because it's quite a big subject for the discussion. But yeah, this is one of the most amazing schemes. You may hear all sorts of stories and drama about not buying properties on the shared ownership scheme. For somebody who wants to get on the ladder and that is the only option, I think it's an amazing scheme. So that is that one. Hard. Let's go to gifts. Esther, there is no maximum or minimum gift that you can receive from anybody. There is no monetary value to it or percentage value to it. Your full deposit can be gifted to you. However, you can have a combined deposit. You may have, let's say, £10,000 of your deposit, that's savings from your employment in the UK. You may have a £10,000 gifts from your mother, father, sister, brother, immediate family. And then the third part can be you sold a car. That is possible. The deposit sources can be combined. As long as they're trackable, provable, can be evidenced, that's absolutely fine. But there is no limit as such. The main thing is 100% of the deposit can be gifted to you. What I would like to point out on this one, actually, while we are talking about deposits, whoever gives you the gift, they will be verified as well. They will be required to go through a verification. And solicitors would usually request for the copy of their ID, identification, and they would want to understand how the gifter, the person that gave you money, accumulated their own fund, the funds to give you. So that has to be a legitimate source and trackable and traceable. The next point you asked me, which is a great point, soft searches and hard searches on credit file. Now, soft searches, you can have, you would have them from, you would have many of them registered in your actual credit files. Guys, when you do run your credit reports, which check my files, you will see soft searches and hard searches. So you have got hard searches the moment you try and run quote on comparison websites, car insurance, setting up any direct debits, going through identification online. These are all soft searches without even you realizing that. Same as when I run the decision in principle, trying to figure out how much money can be borrowed from this or that lender, they would run a soft search at that stage. It will not affect your credit score at all. It will just be visible in your credit file. The hard search usually happens when you apply for the mortgage, when the full mortgage application is submitted. And that's when the lender obviously would want to make sure that they're happy with everything on your file. Same happens when you apply for credit card and let's say, you click on the button, submit application for a credit card with whatever limit. That moment, that's when your you've got a hard search in your account. This is the law. We can't change it. But yeah, so again, if you run a few applications for decision in principle within a very short space of time, i.e. 5, 7, 10 of them within a few days, then obviously that may affect your credit score slightly because it will be perceived as a sign of desperation. Why would somebody want to run 10 decision in principles in a very short space of time? But other than that, it shouldn't affect your credit score. I hope that makes sense and covers your question. There was one point, Esther, if you're still there, I would like you to come back. Was it about life insurance? And guys, I believe this is going to be my last question, the last question. Yeah, what was it about life insurance?
Yeah, does it have any role to play as well in mortgage? Will the lenders ask whether you have a life insurance or not?
So, in the UK, life insurance is not mandatory, or any type of insurance is not mandatory, it's optional, apart from just one, buildings insurance. So having it in place is a condition of your mortgage offer. So by the time you become the owner, you will need to have buildings insurance in place. However, everything else is optional. And life insurance, it is highly recommended that you've got it. This is for your own protection. This is not to please the lender, not to please the advisor or anybody else. You need to have it for your own protection and for your own peace of mind. Because in case of death, it pays out a lump sum of money that can be used to pay off the mortgage. Because let's be honest, mortgage is, as much as it is exciting and gets you on the way of getting your home, you're also committing yourself to the biggest debt of your life. So it's best to have some financial protection in place, i.e. various types of insurances, to make sure that you can just sleep peacefully, in case of A, B, and C or C happens. I heard that some, lenders or the industry are thinking about making life insurance obligatory or a must. However, whether it's going to happen anytime soon, I don't really know. Does that help?
Yes, just a follow-up question. Thank you very much. Thank you very much. You mentioned shared ownership.
You've asked so many questions. Give us chance to ask one question, please, Esther. Please.
This is just a follow-up. Just a follow-up.
You like I said, any remaining questions, guys, you can send them to Adeline. She'll then send it to me. Okay, Chinenya, yes, you can. Yes.
Yeah.
That's the last one.
Okay, thank you. Okay, so my question is still on the Agile stuff. Okay, how about if I'm the last person to like get the money and I'm able to like trace that I gave them money and they're returning the money I give back to them, and I'm able to like, even if they're able to they can be able to verify that there is a transaction between both of us. I lent you money and then they're giving me the money back. Will it still
I will tell you
have
this.
an impact?
If you're ready to go through pain of proving that, then that could be okay. If you're ready to provide many deposits, let's say 2 years ago, you gave that person £1,000 and then two years later, they are returning you the money, then potentially that could be fine. That obviously, as long as there is a logical explanation, then that should be fine.
Okay.
Yeah.
And then another thing, in between the adjust stuff and then your salary comes in between, like you get about probably 2,000 to 3,000 a month, and then you take out about 1,000 every month for their job, and then when doing the deposit, would they have to like investigate every inch of the money that comes in and not taking into cognizance that your salary comes in as well, about 3 to 4K comes into your account as your salary?
Yeah, so
I don't know if I'm making sense. Yeah.
Yeah, it's not about investigating. It's just for the lender, they will need to have a clear understanding and clear picture of what comes from where and the origin. As long as they can see that, that is fine. But why Agile proves to be a bit more challenging simply because there are so many people usually involved in the pot, contributing to the pot. But I know sometimes there are just 3 people contributing to that. Then it's kind of easier to trace. And again, it all depends on the lender's view on that.
Okay.
At the end of the day. Does that help?
Thanks a lot, Anna. Yeah, it does. No, thank you so much.
That's absolutely fine. And thank you for your question.
Guys, thank you.
I think we're going to finish off for today. I would like to thank everybody for taking your time to join in today. It's been amazing. I love the questions. Sabrina, I think you're probably tired of typing. I can see how many questions there were in the chat. Thank you so much. It's amazing. Adeline, have you got anything to say before we let everybody go?
Yeah, thank you very much. Thank you so much, Inna. It's been a very educative section, if you all will agree with me. And the most interesting part of it is that you wanting to work with us, the fact that you want to run a free credits review for each and every one of us, that's a plus. We really appreciate that from you. And I believe it's not just ending. we're having another section, and aside the section, you will get to meet each members that are interested in this mortgage process. So which made it official that you're definitely working with MIS. You're gonna work. So it's not gonna be a short time communication, trust me. So you're gonna work with each and every one of us. And to the members that tuned in, we really, really appreciate. Inna is reliable. Go ahead, ask her whatever questions, things that are not clear. Trust me, when it comes to mortgage, it's not something you have to run in between 2 hour section. It's not enough. I'm sure the next section still won't be enough, but then Inna is always there for us. She's not asking you for anything at this stage. So just ring him. You could talk to him. Okay, she has actually posted her QR code. Go ahead, book your consultation with him. She'll be readily available to support us. I want each and every one of you to come on the group and cheer up and tell them, oh, Inna has made it happen for us finally. Yes, we've gotten our mortgage approved. We want to see all of this. We're hoping. That's what we're hoping to get. That's the end result we want to get from this session.
Yeah, and thank you, Adeline. I was thinking about, about it all yesterday. I think you're doing an amazing job, organizing all of the events, and I saw some of the social media posts, and it is amazing. It requires lots of effort and lots of dedication. And thank you so much, obviously, for doing all of this and actually allowing people to get information, that they don't always easily find on, other sources. And I'm happy to continue to share. And this is my way of giving. This is my way of, exchanging energy with the universe, really. So I'm totally happy. Thank you so much. I think I'm really charged up now. I can feel the energy, even though I couldn't see many faces. I'm really charged up. So I don't know how I'm going to sleep tonight.
Oh, good to hear that anyway. I know you were like, are they gonna tune in? I said, trust me, they've given their words that they're gonna join, they're gonna come for the section. And you can see that we have over 60, 70. How many do we have? 67 people in attendance.
That's
with
amazing.
The tight schedule. That's amazing. Everyone have a very tight schedule when it comes to UK work. You understand that?
Oh, yes.
So thank you everyone for showing up. And thank you to the rest of my team. Trust me, it's not just me. I can't do this alone.
I can imagine, yes. and I also wanted to thank Sabrina.
1,000 women. I can't do this alone. So all of the executive, Mosra is here. Mosra is like my partner. You understand?
Yes,
she's my
absolutely.
partner. Thank you all the executives. Thank you all the moms. Thank you so much. And the daddy that joined us today, I'm sure you'll be surprised because I told you it's majorly women. Thank you. It shows that our husbands, they are all supporting us.
Well.
So thank you for tuning in as well. I don't know.
Thank you. And biggest thanks as well goes to Sabrina. Thank you for
Sabrina. Thank you very much. I know we are meeting for the first time, but she told me about you coming in to join the section to support us. Thank you very much, Sabrina.
Thank you,
everyone.
It's been a pleasure.
It's been an amazing section. Thank you.
Yes. All right, guys. Well, look, enjoy your evening. Enjoy the rest of the bank holidays, a few hours of it. And hopefully we will all be blessed with slightly better weather in the next few days.
Hopefully.
Thank you. Take care, guys.
All right. Bye.
Thank you.
Bye.
Bye.
Thank you, guys. Bye.
Bye.